Portfolio Builder members, today is a new trade alert day for our Diamond Club, and the profits keep piling in. Today's theme is prepare for war with China. While most portfolios around the world really got hammered in the last week, our Diamond portfolio was completely protected against the downside by writing the in-the-money covered call. We're now up $18,987. Starting in the middle of the Christmas massacre, we've been using this strategy, teaching a large group of investors, and this is up 11.24%. It's done it with a ton of protection and very little volatility. So if you like to make small profits consistently with very little drawdown in your account, pay attention to this video. Our portfolio didn't go up too much from last week to this week, but we were never in the red. While the rest of the world saw some serious losses last week, we did not. And so our portfolio stuck in there with the protective covered calls. If we go down to the trade alerts, the first step is you need to own 300 shares of Microsoft, 100 of Apple, Facebook, Intel, Cisco, 200 of Comcast, 900 at Bank of America, 500 at Wells Fargo. This is a approximate copycat of what you would own in the SPY and QQQ if you just looked at the top positions and then pulled out Google, Berkshire, and Amazon, which costs too much to own 100. And again, for every 100 shares, we get to write one covered call. This allows us to generate retirement income and protect our assets. So yesterday, we actually were holding on to a larger profit on the covered call while the stocks were down a little bit. But because we want to keep this product passive, we only trade on Tuesdays. It's no big deal. We made a profit week over week. Some people were actually assigned on trades like the Wells Fargo, which means you got the guaranteed maximum profit on that trade and you're back into cash. And that's why we prefer to write covered calls against the underlying asset rather than write put options and then wake up one morning owning an asset that has dropped. So in our strategy, the worst case scenario is we get a guaranteed profit and end up in cash. So today's first step, if you're new, is to just buy these stocks and then skip to step B, which is where we're going to write the new covered calls. If you did participate in the last set of covered calls, we need to simply buy to close all of those covered calls. They are all coming in at a profit, except for Comcast. Comcast has been very resilient through this volatility, and we had to pay an extra 20 cents, but the underlying has gone up considerably, so we're doing great on that one. So again, cover all your positions by issuing a buy to close on each individual contract, and then you're going to sell to open at the expiration date of 5/24/2019. On Microsoft, we're going $2 in the money. That gives us $2 of protection, but we're getting $3 of credit. So if we're wrong and the market does go up from here, we get $1.12 per share. If the market has a little volatility between now and next Tuesday, this covered call will lose value and we'll be able to buy it back for a profit and also hold on to our Microsoft shares. If we look at the Apple trade, we have $8.55 of protection. And if we're wrong and the market flies higher, we're going to make about $2.14 a share. On Facebook, we have $11 of profit, actually $11.50. And if we're wrong, we're going to make around $1 a share by being assigned. So I'm just looking at the credit we take on the right-hand column right here. This is the option price start. So you'll get a slightly different credit. It doesn't matter. The strike price is important. At those levels, there's a large put option contract of open interest where large Wall Street investors will buy up shares in bulk at right above these prices. So that's where we're picking our strikes today. Over at Intel, we have a 475 credit, which gives us about 50 cents baked into the cake profit per share if the market goes higher and we do get assigned. Cisco, we have 293. That's giving us about 70 cents if we're wrong. And again, if the market goes flat or slightly down, we'll make even greater profits than if the market goes up. And we'll talk about why we're still in a defensive strategy right here. Cisco, again, is at the 293. Comcast is at a 97 credit with the 42.50 strike. That one has about 40 cents baked into the cake of profit. And again, this is all relative to the ETF price. On the bigger positions, I'm more inclined to have more protection, which is Microsoft, Apple, and Facebook. And on these smaller positions, I'm taking a little bit less protection and a greater potential return. Now, we do have a large position in Bank of America and Wells Fargo, and we did go a little more bullish. This is still in the money. We still have a $1.90 protection on Bank of America and a $1.10 on Wells Fargo. However, if the market goes higher, we have a very nice profit baked into the cake on both of those. If we go sideways or slightly down, again, we get an even bigger return. So that's as simple as it gets. I'm not issuing a out of the money put option on this portfolio yet. Now, I do want to flip through some screenshots I've been collecting overnight. This is the Shanghai Composites. We are seeing the Chinese stock market has crashed about 10%, which is greater than the S&P 500. A little bit of a rebound yesterday, as well as the S&P 500 futures market. This is again taken last night. As the Chinese currency is devaluing itself to fight against the tariffs and make prices a little bit cheaper for the importers. We've seen Bitcoin flying up. This was last night. It's even higher. I think it hit above 8,000 last night. You can look at the exchange rate on the CNY. And as this approaches 7, this gets to a critical level. So we'll see just how much they will devalue their currency. The rush into U.S. Treasuries continues as yields go lower and lower, and this is a play we're taking advantage of in our Whale Club, which I'll give you a preview of shortly. Same thing for that 10-year Treasury. The most important person to follow on Twitter is Donald Trump, of course, and this is giving us our best clues as to major risks in the market. And so this morning he said he feels good about a trade deal. They're going to meet in 3 weeks. So we'll see how that goes. I think we have 3 weeks of potential wait and see in the market, which is why I'm waiting to add that short position to this portfolio. Our basic portfolio already does have it, and we'll look at that in a little bit. But if this escalates, get ready for a major crash. And right now, I really don't see a resolution in sight. So Trump's been busy tweeting away all morning, basically saying that this will be good for the U.S. economy and that lots of jobs will move to our continent, and that the Chinese are in a bad spot. Also, really important for our Diamond program is how this will affect the Apple iPhone. Of course, they're just going to start shipping it to an intermediate country and then over to the United States to get past that 25% tariff. If they did put it on electronics, I kind of doubt that they will make that move and shoot ourselves in the foot with one of our most valuable companies in America. So we're keeping a close eye on this, and this is really the best gauge of how much protection we want to add to our portfolio during this period of time. So what would be great for us is this does escalate, and we continue to write those in the money covered calls. We generate our consistent boring return. Volatility goes up. That means the income we can create by writing the covered call skyrockets higher. And then once we see a resolution has occurred, we can move the strike above the trading price and get a double payday. That means our asset increases in value, and we get to collect profits from writing out of the money covered calls. So that's kind of what we're looking at. Here's Bitcoin this morning hitting 8,000. So the Chinese are ditching their own currency because they know it's going to lose probably around 10 to 25% of its value to fight against these tariffs. And so the rich Chinese, of course, don't want to see that happen. On Thursdays, I'll be covering our trade recommendations for the cryptocurrency portfolio. Here's a look at the bond market around the world, and you can see The best deal on bonds is definitely in America, and we have the strongest currency. So Japan's currency is a joke. Chinese currency is a joke. So we're going to have another big rush into the dollar and into the treasury market as long as this trade war escalates. Here's a look at the futures market this morning. We can see that we've taken the pain over the last week, so I've reduced the protection. Okay, so after we get a big VIX spike, we now have this waiting room till 3 weeks to see what comes of the China deal. Perhaps they start talking nicely again, but if not, we'll be prepared. But for now, I do think we have a window of opportunity to be a little less defensive and catch some sort of rebound or flat move in the market. So now we're looking at crude oil. Another look at the Chinese stock market. Look at some of the emerging markets and related markets to that. So in general, a lot of pain overnight following the 2.5% dip in the U.S. equities yesterday. But now the futures market for these are rebounding, and so is the U.S. market. And here's Trump saying China will be pumping money into their system and probably reducing interest rates, as always, in order to make up for the business they are and will be losing. If the Federal Reserve ever did a match, it would be game over, we win. So more pressure for the Fed to lower rates, which would be a big push for lower rates in the Treasury market, which would be good for our Whale Club members. But if there's tariffs, we're going to have rising prices, which will create inflation, which eventually would edge the Fed to raise rates. So we may end up in a world where we have the inflation starting to climb as we see the growth in profits deteriorating from global slowdown in trade. So this will be interesting to see how the Fed does react. In terms of what the Wall Street's betting on the SPY, we can see there's still a lot of protection loading up, not very far from here at the 280 level. When this screenshot was taken, SPY was at 283.50. So we can see there's 21,000 contracts at 280. So multiply that by 100. And now you have 217,000 SPY shares will be purchased for a price of 280 by Wall Street if it does come to that level. So that was one reason why we chose the in-the-money covered calls today. Although I do expect we may get a little relief rally, you can see Wall Street is still prepared for a move towards 280. Now this is 3 days out. There's even more interest. So this would have 1.2 million shares purchasing the SPY at 280 in 3 days from now. And once we go 10 days out, the option volume and open interest is much smaller, but still sitting around this 280 and 277 level. So market's basically betting flat in terms of what Wall Street's seeing. Now here's some of the posts, and again, these are available intraday to anyone who does subscribe to our Telegram chat groups. So you'll get feeds all morning, all night. You can see what I'm looking at, what I'm studying, which YouTube videos I'm watching, everything of that nature, which important indicators we're watching and charts. So this was yesterday. Obviously, we would have had a greater profit in the defensive covered calls if we had closed them on Monday, because this is what we had experienced. A lot of people were freaked out. So today, market did bounce higher, and we did fine. We made a nice profit week over week, and we had no volatility, no losses, no drawdown, no freaking out. We had our covered calls way below these prices and didn't even get close to them. And this was before any of this pain had even begun. And the truth is, we've been doing this almost most of the year. I've been very skeptical of the rally and expecting some problems. And so while we missed out on some of the gains in the market, we've been protected week after week after week, playing it safe. So this was yesterday's close. Here was this morning's open. And so that made covering our covered calls more expensive, but again, we made money all around. Here's some charts of each of our core positions. Wells Fargo, Microsoft. This one is just such an animal. Very hard to put a dent on Microsoft, one of our core positions. It is the largest position in the SPY ETF. Intel, Facebook, Cisco, Comcast, Bank of America, Apple. Here's some of the top headlines. Now these are all from Seeking Alpha and from their news feed, which are targeted just to our core positions that we're following. And so there's a big fear that Apple's margins could be hurt from a tariff war. And so we'll see if they will really raise the tariffs on the electronics, especially cell phones. We'll see. That's something we will watch very carefully. And one reason I'm a little more defensive on that Apple position in terms of writing the covered call lower than the rest of the positions in our portfolio. So no big news on that front. For those of you following our SPY program in the basic membership, we're sitting pretty on that. We wrote the 277 strike yesterday, and for a credit of 562, that had about $1.25 baked into the cake. So that's enough return. If we can make $1.25 per share 3 times a week, that's over 100% return per year just by doing the covered call Monday, Wednesday, Friday. Now the SPY, for those of you who are not aware, is unique. It's not only the most traded ETF or security in the world, it's not only the biggest fund in the world, about double that of Ray Dalio's fund, holding $240 billion in it. It also has a very unique option market that has expirations Monday, Wednesday, Friday, which makes it extremely valuable for anyone who knows a thing or two about the option market. And so we simply write a covered call against this SPY position every Monday, Wednesday, Friday. If our covered call has created a huge profit overnight, we will cover it and add even a deeper in the money covered call on a Tuesday or Thursday. So we have very, very tight control over the P&L on this one. It's very hard to lose money because we're constantly writing the covered call, taking profits when it loses value, and just doing this over and over and over again. This portfolio takes at least $15,000 to use one-to-one margin and get 100 shares of the SPY, and then you can protect your assets by writing the covered call. So it's a lot like building yourself a casino and then letting gamblers come in. They're going to bet that your shares are going to go up a lot, and they're going to borrow them from you for around $50 to $100 per 100 shares you have. Monday, Wednesday, Friday. You can do this 3 times a week, 52 weeks a year. Do the math, 156 times, collect $100 a pop. You're making $15,600 of income from a very mindless, safe trade. So if you took a lot of losses over the last week or two and you're a little scared, well, you should be. We're headed towards war with China. Things could get a lot worse. If you follow our programs, you can protect your capital very easily and still make money. And that's only possible with a covered call strategy. You put the money up, you own the asset that everybody wants, but they're not willing to put the cash towards to purchase. They want to borrow your shares for 24 to 48 hours, and they'll pay $50 to $100 for the right to do that. In fact, they'll pay even more than that as volatility goes up. So right now, volatility is much higher, and our profit has actually quadrupled. Think of it like owning an apartment in New York City, and you're using the Airbnb app to rent it out. Well, rent just quadrupled because of this little stunt in the stock market. And if things get even more hairy, rent's going to get even more expensive. So this is a great setup for us. The other program we do publish is the Whale Club. It's very boring. Trades U.S. Treasuries using the TLT right now. It does have the ability to swap into a portfolio of stocks, but it would only do this after a very large crash and a drop back in volatility. So it's playing it super safe. Right now it's long the TLT with 95% allocation and no hedge, and it's just doing the covered call every Thursday. This is a very boring, safe strategy that has had very little drawdown It's up 6.7%, started during the Christmas massacre as well. And it's really ideal for people with $1 million or more, because once we rotate into these stocks, to have 100 shares of Amazon, you need 184K. To have 100 shares of Google, you're going to need 113K. So just between those two, you're looking at around $300,000 once we do pivot from the long bonds into equities. So again, we would want to have very cheap valuations to hop into that portfolio, and that would be done by selling the long bonds. My expectation, if this trade war escalates, is that we'll see a rush into the TLT with a crashing stock market. And then once the stock market has crashed, everyone will realize that these bonds are paying way too little interest. And then that's when I think we'll be rotating into this TBT ETF and see the bull market in the bonds, which has been about 30 years, finally come to an end, and we'll start seeing rising rates. So that's sort of the outlook for this one. And again, it's for bigger investors who aren't trying to make a huge return. You're going to be happy in that 10 to 20% a year with very, very safe strategies. For our high yield program, we are going for a much higher return, which is closer to 2 to 3% per month. And in our basic program, we're aiming for around 1% a month, but sometimes, well, so far we've averaged closer to 2. So again, we do like to under-promise, over-deliver in this system. And keep in mind, when you do upgrade from a free trial, if you are on a free trial, you'll get 30 days access free to our Diamond Club, which retails at $5,000 a year, and our sales team does have some small discounts available. And you'll get a 30-day trial to our Whale Club, which costs retail online at $10K a year. And again, we can provide a small discount on this if you do call your rep, which is at the top of each email. They can give you some discounts over the phone. Now, we do have a live webinar starting in about an hour, so I hope you can join that. A replay will be sent out to everyone. And that's a wrap for today's Trade Alert. Thanks again.